Onkar of PPFAS Mutual Fund now with us. Raunak, good to have you with us here. You're one of the few, I guess, who has a view on, actually, maybe other people also have a view, but you've got positions in a lot of the FANG stocks, AI-related stocks, right, which have all done so well in the US. This unending debate about whether, too much money is being spent and whether this is all going to sort of, amount to what? Is there mistakes in capital allocation which are going to be made? And, especially now after everybody sort of, committing investments in each other. So it's like one big, nice round circle. What do you make of it, Raunak?
Thank you for inviting, Prashant. I agree, there can be two aspects to looking at it. One is that the build-out is needed to be happening because people are building applications on top of these AI models and people are scaling their use cases across different industries, across different user base. So that is seen. The scale at which these apps have been used today is completely unprecedented. If you see, it was just 3 years back when ChatGPT, the app, was launched. That is number one. On the other hand, one can look at it from a financial engineering point of view, whether it is supposed to happen in terms of vendor financing, whether people can scale their balance sheets at such a rapid pace in terms of capex and in terms of capital deployment and lending to their own customers. So you have to balance that view over a period of time and see where the growth actually is going to come from. And the focus, I think, for most people should be on the actual application of the technology and not just having a say that, okay, I have applied AI, but it is just for the namesake and not actually useful in the overall scheme of things. So it's a mixed view in my view. But in the end, you have to be conscious about the valuations you're paying for some of these companies.
Okay, all right. I think your overseas tech investments is about 11.5% of the overall fund size?
Yes, so we have 4 companies in our global portfolio in the FlexiCap fund.
Yeah.
One is Microsoft, the Alphabet, which is the parent company of Google, Meta Platforms, the parent company of Facebook, Instagram, and we have Amazon, these 4 companies.
So how is this 11.5%? How has it changed in the last 3 months? And what is your view going ahead? Are you looking to bring down or increase your holding given what's happening?
I wouldn't want to give a forward-looking view as to what we will do, but it has been overall in the same range in terms of percentage over the past few months. In fact, if you see from 2022 onwards, that number has declined quite dramatically on account of the FlexiCap fund not being able to invest globally from the fresh inflows that we get. So this is the residual amount that we have already invested and some dividends which were reinvested in some of those stocks.
All right. Hi, Raunak. Good afternoon. Good to see you, Ben. Raunak, what about the cash? It continues to remain in mid-20s. You believe better opportunities will come?
We'll see when opportunities will come, but at the moment, we are not finding too many attractive opportunities. So within the portfolio, wherever we have an understanding of the business model or the cycle, we are deploying cautiously within those stocks. But broadly, if you see, we have not added too many new things in the portfolio.
One contra call that you'll have gone for big time is IEX. And people are debating weekly expiry. There's going to be some regulation or not. There's a listed and unlisted play. You have gone into the one that's actually come off the top, but there is still not too much clarity out there. Tell us about that call on IEX, because if I look at your last month's sheet as well, you'll have adding on to that position, building a bigger one.
Yes, so IEX has been facing a lot of adverse news flow, if you see, in the past 18 months to 2-year point of view, from the consultation paper coming in and even the dynamics of the market changing. But not much has happened on the ground. That is one aspect of looking at it. The other is when you have an established network effect of an incumbent player who is actually dominant and who actually has the user interface to cater to the demand for shorter term power trading, it is important to understand what is the new proposition that is coming in. So, of course, regulatory changes can affect the business model. We are conscious of that. And hence, the position has not scaled dramatically. So, we are a little bit added to what the existing position was. But on the other hand, we have to see whether the existing competitive advantage remains or not. That is still unclear, like you said. And even the implementation of the overall market coupling, we have to see how it executes over a period of time. We will take it as the news flow comes in and as the business performance is reported by the company. But so far, there was no need for concern because the existing business model has a very, very strong roots in terms of how they operate.
Okay. Raunak, quick question. As a house, what is the view on gold and silver?
So none of our schemes have any commodity exposure, so we don't have a specific view. Our general view has been that these commodities are part of investment portfolios of many people. So asset allocation rules should be followed. You cannot have one asset becoming disproportionate part of your overall portfolio. So as long as people are comfortable with the asset allocation in these commodities, it should be okay.
Okay, great chatting with you. Short one today, but look forward to the next one. Thank you for joining in. Get into a break. On the other side, we'll get you a check on what Dealing Rooms is saying in our segment D Street Chatter. We'll also get you a few BTST calls. Stay tuned.